Oil trading, right? If you want to trade oil, you trade in futures, meaning you buy a contract which guarantees that the oil producer will supply oil at some later date. In Moscow, if you're trading on American oil, on WTI, West Texas Intermediate, you're not actually trading in real oil, you're trading in speculative contracts. They're called futures, but they're basically bets on how much oil will cost on the day before the expiration date for real WTI American oil futures. If you have futures for oil that will be delivered on May 2nd, those futures expire on April 21st. If you are holding the contract for oil on April 21st, on April 21st, it disappears. Your chariot turns into a pumpkin and your contract turns into real oil and you have to accept delivery on it. You go into the market, you're hoping to make some money in oil. You buy futures contracts, you throw in, I don't know, 1,000,000 rubles of your own money. You buy futures contracts at $20 a barrel and you're holding them. You're holding them in the morning of April 20th. The price starts to drop. The price starts to drop because the demand driven down by the coronavirus plus the inability of OPEC to agree on the price have created this situation where they basically don't have enough storage to store all the oil, and that's a huge problem if you're holding your futures contracts. So everybody's trying to sell them. People start selling their contracts, but not all of them manage to. Moscow Exchange stops trading on oil at about 6 p.m. local time. That's about 11 a.m. New York time. So the markets on the East Coast are fully open by that point, right? 11 a.m. trading basically just started. Moscow holds trading on oil at 6 p.m. local time. At 6:30, markets in Moscow close. The price is frozen at $8.84 a barrel, but people can't sell for $8.84 because trading is frozen, right? So you're still holding your futures contracts and you're thinking, okay, fine, whatever. I couldn't sell them today, but that's okay because tomorrow I have the final day before the contract expires. It's gonna be fine. But then the Moscow Exchange decides to f*** you. In the middle of the night, just before market close in New York, Moscow Exchange dumps all oil future contracts WTI for May at negative 37.63.
Hey Ron.
Hey Billy.
I think they were panicking obviously, but they were trying to do what seemed rational at the time. They were trying to cut the losses for the brokers and for the exchange and get out of there while they still could. So they forcefully sold all the futures from all the brokers. Meaning, if you were a trader at that point, not only did you lose all your money, you also paid somebody to buy your contracts at $37.63 a barrel. That's just the start of your problems though, because you were trading on a margin. You threw in, let's say, 300,000 rubles of your own money, and your broker loaned you 1,000,000 more. But when the exchange sold all your contracts, you lost all your money, you lost all your broker's money, and you paid somebody to buy your futures contracts. So now you owe people a lot of money which you don't have. This is like buying a new apartment for your family amounts of money. This is your parents' inheritance amounts of money. The house always wins. And unless you are a professional trader with a bank behind you, be careful and don't use any more money than you are prepared to lose. And I think that's it.